Welcome back to We Here Now. I'm X. Let's get to it. So, support and resistance. This is video 9 out of the Trading Doctrine 1.8. So, this is when we're going to be looking at the charts a little bit. Because I can tell you what a support and resistance is, but it'll be much easier to just show. Thinking about right now, I have Johnson and Johnson up right now. Let me know if these green lines, are a little um, too confusing for you guys right now. But until then, I will keep them up. So, most beginners enter trades randomly. They see price moving and jump in. But professional traders don't trade randomly. They wait for price to come to a specific areas because the market doesn't react everywhere. It reacts at levels. So in this lesson, I'm going to show you how to identify where price is most likely going and how to react even before it gets there. In the last lesson, we talked about market structure. Excuse me. That tells you direction, but direction alone isn't enough because even in a strong trend, price doesn't move in a straight line. It pulls back, reacts, and continues. Support and resistance is what helps you understand where those reactions happen. What is support and resistance? Support and resistance are areas where price has reacted before. Not exact lines, but zones. Support is where price tends to stop falling and bounce. Resistance is where price tends to stop rising and pull back. These areas exist because of order flow. Buyers and sellers remember these levels. Support is an area where buyers step in. You'll often see price drop into a level, then bounce multiple times. That's not random, that's demand. Each time price holds at that level, it confirms that buyers are willing to defend it. In an uptrend, support becomes your opportunity zone for buying. All right, so let's look at some support. Let me make sure. Uh, yes, let's look at some support on the chart. I have an indicator. Let's just turn this indicator off. This is basically a fair value gap. Well, it's not basically a fair value gap. It is a fair value gap, and fair value gaps can be used as support and resistance. All right, so let's just turn that off. And a good way to find support. Let's move down to a smaller time frame. Let's see an hour. All right. So we have price in this area right here. We have price that likes to come in this area. Yep, I would say yeah. Like to come in this area. This is, no, actually this is support. I'm sorry. This is support. I mean resistance, and then support is down here. bear with me, guys. Bear with me. So you can still use so support would be right here. Why? Because price have came in this area multiple times, multiple times, multiple times. So so typically what happens is that when price comes in this area, it'll bounce up. So you did it right here, boom, boom, boom. Okay, came down with here with this red candle, and then the green one, boom, shot back up, shot back up. So let me change this to a crypto. Let me change this to a crypto. Let me change this to a crypto. I don't think I have anything written on this one. Yeah. All right. So we on the hour, and so we found another resistance up here. Another resistance up here. It's basically started from right here, which is a fair value gap. Let's draw the fair value gap right there. And right there. I'm almost guaranteed that a red fair value gap is going to pop up across this thing. Let's see. Let's see. I might be wrong, but let's see. Boom. There it is. There it is. There it is. So with this resistance, I know I keep messing up these words. I know. My apologies. Support is on the bottom. Resistance is at the top. So with this resistance right here, every time price came in this area, this zone, price bounced down. It got close right here, bounced down. It barely got up there, but it still bounced down. And that's based off this EMA right here. This 60-day EMA right here. And into the zone, came down. Into the zone, shot down. All the way down here. And so I can actually just flip this and show you guys support. No, I don't even want to do that. I don't want to do that. Let's not confuse you guys. Let's not confuse you guys. Let's just find a new support. Let's just find a new support. Blah, 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 blah. Yeah, let's do this one. Let's do this one. So you see all these wicks in here. I would say this is support. And this green fair value gap kind of, tells me that it is support right here. Let's see if price, so if price were to come in this area, it'll bounce. Most likely, it'll bounce. Most likely, it'll bounce. But you can't just use one indicator to make a good decision. I have 3 EMAs, 30 EMA, 60 EMA, 200 EMA. I have these fair value gaps, and the only reason why I have these because I don't like to draw these boxes everywhere. And I have the MACD down here. Those are only indicators that I use. So I'm kind of rambling. Let's get back to it. Okay. So support is an area where buyers step in. So of course, support, the ground is support. As you can see, buyers are actually starting to step in based on the crossing of the MACD, 3 candlestick chart pattern, reversal, engulfing candles, and some ways away from the 30-day EMA. These are all of the checks that I go through, and it looks like it's a I forget what chart pattern this is, but I call it a golf club. The reason why I call it the golf club because it looks like a golf club. I'm pretty sure if I go down to the 30-minute, you guys will be able to see it a little better. That's 3 hours, not 30 minutes. Yeah, so let's draw this out real quick. Like that. Yeah. Kind of looks like a golf club. This is the bad one, but this is actually a falling wedge. So if it was a golf club, this would be the pole, and it'll look something like this. This is what it will look like. That's why I call it a golf club. So you often see price drop into a level, then bounce multiple times. That's not random. That's demand. Each time price holds that level and confirms that buyers are willing to defend it in an uptrend. Support becomes your opportunity zone for buying. I feel like I said that already. But also with these trend lines, they can also act they also act as support and resistance. So this is the ground. So this will be support. This is the ceiling. This is the resistance. All right. So moving on to resistance. Resistance is the opposite. I kind of already explained this, but let me give you the data. So it's where sellers step in, price moves up into an area and gets rejected, and again and again. That tells you supply is present. In a downtrend, resistance becomes your opportunity zone for selling. So you see how price reacted to this trend line, which is the ceiling, which is resistance. We got 1, 2, 3, 4, 5. All you need is 3 touches for a trend line. So this has already become a valid trend line. So when price touched it, there was a high possibility that price was going to fall back from it. That's what it did right here. And that's what it did right here. And so with support, it's doing the same thing. Come on. Ooh, this is much steeper than I thought. So it got its 3, and then boom, it's bouncing up. So it might do it again and then break out, but until then, you know. All right, moving on. It's getting good, guys, getting good. So one of the biggest mistakes beginners make is drawing perfect lines. In other words, what I was just doing, trying to make them perfect. Trend lines. But the market doesn't move with precision like that. It moves in zones. You'll often see price slightly break a level, then reverse. That's normal. Think in areas, not exact prices. One powerful concept is role reversal. When resistance breaks, when resistance breaks, it can become support. In other words, when this breaks, it'll touch this EMA, then come back down, and it should touch this and then lift off again. Should lift off again. Let's see if I can find one. Let's see if I can find one. I think this is one right here. Not really. All right, yeah. Let's not just do that. Let's not do that. All right. Why does that happen? Because traders who were trapped on the wrong side now react when price comes back. This is where a lot of high probability setups can form. If this, then that. Let's simplify everything. If price is in an uptrend, look for support to buy. That's oh wow. That don't look too good. So we're looking at this right here. It's clearly in the uptrend. Bitcoin on the 12-hour is clearly in the uptrend. So if price is in an uptrend, look for support to buy. This will be a support to buy. This will be a support to buy. Why? Because it has support from this EMA. This one as well. This one, it broke through. And however, it made this EMA, which can act as support and resistance, it flipped this EMA from support to resistance. See, now price is trying to push back through it, and it couldn't. All right, so if price breaks a level, watch for role reversal. This was role reversal. Boom, boom, right there. If price is between levels, wait. And that's what just happened. It started to range. In other words, between levels, started to range. Consolidation will be another word. You never want to trade in consolidation. You want to wait until that price consolidation, price, the market structure is finished. Here we go, right here. This is where it broke out, right there. How did I do that? I got the high of the consolidation area and the low of the consolidation area, and I drew a box. And it looks like it kind of acts as support. Yeah, acted just like support. All right. If price is between levels, wait. Levels tell you where to act. Structure tells you what to do. Common beginner mistake. Most beginners chase price in the middle of nowhere. They don't wait for levels. This leads to bad entries and poor risk. In emotional trading, professionals are patient. They wait for price to come to them. So, on the next lesson, we're going to combine everything you've learned so far, because identifying structure and levels is powerful. But the real edge comes from confluence. When multiple factors align at the same area, that's when trades go from random to high probability. So I'm gonna give you a little sneak peek on that. I'm gonna give you a little sneak peek on that. So, come on. So right here, I would have gotten in somewhere around in here. Between these candles, somewhere right around in here. Why? For one, it's respecting the higher time frame trend line right here. For two, it showed a 3 candle reversal pattern, which is 1, 2, 3. And what am I on? 3 or 4? Three or four. This is a engulfing candle right there. And I'm pretty sure if I draw some trend lines, we will be breaking out of something. Yeah, this is a falling wedge. This is a falling wedge. Yes, this is the falling wedge right here. I know I keep saying it. But that was another reason why I would have gotten in. That's 1, 2, 3. That's 4 ways on why I got into that trade. So, I believe that's it for this video. Thank you again for staying for the whole video. Once again, this is not financial advice. Until then, you've been watching We Here Now. I'm X. It was a pleasure on giving you guys another video in the trading doctrine. Guys, let's make this money. Let's study these charts. Peace.